Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside, currently working on this yellow wave 3. Inside wave 3 we have the lower degree green count 1, 2, 3, 4, 5, where wave 4 hit the common target area for your wave 4 between 57.6k and 53.3k. The target area for this wave 5 is between 78.6k and 110.6k, which of course is a very big area, but based on the lower time frame structures we will be able to eventually get more specific. After this wave 3 in yellow and therefore this wave 5, we look for a 3-wave corrective structure to the downside in a wave 4. A wave 4 of a higher degree, which is the yellow wave 4 here, does like to retrace to the wave 4 of a lower degree, which is the wave 4 in green. Therefore, if you take a box from the high to the low of the green wave 4, this can act as an important target area for your wave 4 of a higher degree, the yellow wave 4, between 73.8k and 56.5k. After this wave 4, we are then looking for a final impulse to the upside in a wave 5 before we then get a bigger retracement towards the downside. On the daily time frame, the bullish scenario where the low is an impulse to the upside where we have a finished wave 1, 2, 3, 4, 5, look for a 2 and then continuation to the upside in a wave 3, after which we then create a 4 and a 5, and after that green wave 5 we then finish the yellow wave 3 to start the yellow 4 and then a move to the upside in the yellow 5 as discussed on the weekly time frame. The common target for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of 1, giving you a target between 64.3k and 59.8k. We are now also ranging after the 0.382 Fib time, taken from the same pivot, which is generally a minimum target for a wave 2. Either we are looking for a bigger 3-wave corrective structure in a wave 2 or a corrective structure that is finishing with this one move towards the downside, and I will show you both options. The first one here is a zigzag, so this is a bigger sideways 3-wave structure, will take more time, where we then have a finished 1, 2, 3, 4, 5 leading diagonal to the downside in a wave A, look for a flat structure in a wave B, and then one more move towards the downside in a wave C, which has to be an impulsive structure. Preferably your diagonal here, wave A, is already finished because of the local price action. Let me explain in more detail. So in this diagonal, all of the waves are 3-wave structures, zigzag family structures. So we have a 3-wave 1, 2, 3, 4, and then eventually a 5. Now if we want to end wave A at the low and therefore wave 5 at the low as well, we need to be able to count a WXY in here because this latest structure down is very much a 3-wave structure locally. We can't count this as an impulse anymore in a 1, 2, 3, 4, 5 because wave 4 touched the golden pocket, which is an invalidation. So therefore we have to look for a WXY. However, the moment price hits the 0.7 Fibonacci over here, taken from the start to the end of this first structure down, it significantly reduces the probabilities you're looking at a WXY to the downside, so therefore it doesn't have high probability. So it works better if we end wave A and of course therefore then also wave 5 at the higher low and look for a flat structure, a 3-wave A, a 3-wave B, and a 5-wave C to the upside to start this wave B. The common target for B and a flat is the 1.236 to the 1.38 Fibonacci, taken from the low to the high of your A, which as you can see is touched and at the moment respected. But it does mean that now during the weekend we want to see an impulse to the upside in a wave 1, 2, 3, 4, 5. And most commonly the weekend is a ranging structure and not an impulsive structure. So that does impact the probabilities for this particular scenario. If price would move to the upside, then we have two areas of interest, two main areas of resistance over here. First of all, in confluence with the 382, the area between 66.6k and 67.1k, and then in the middle of the box here, we have 69.1k and 69.7k. If price can make it to around 69k, then the target for your wave C is between 61.6k and 59.7k, which is also in confluence with this support box here, 60.5k to 60.9k. The second scenario is an unfinished WXY, where short term it is more bearish, as we want to take this low before taking out this high, compared to the previous scenario where we look for continuation to the upside impulsively because of the flat ABC. But long term, this one is actually more bullish, because after the WXY you expect a bigger move towards the upside. Now what you're looking at here is a zigzag to the downside, ABC in a wave W, another zigzag to the upside in a wave X, and then a bigger AB, and then an ending diagonal inside your wave C. In this particular scenario, we then have a three-wave structure in 3, look for a three-wave structure in 4, and then a final three-wave move towards the downside in a wave 5. The common target for your wave C is in the blue box over here, the 1 to 1.236 trend-based fib extension, taken from the start to the end of A to the end of B, giving you a target between 64.1k and 62.6k. Here we look for a weekend range in a wave 4, grinding towards the upside, towards some interesting resistance that we have here as well. As you can see, two boxes. We have a point of control of this volume profile in confluence with the 0.5 sitting between 64.8 and 65k, and then we have another point of control over here and also the value area high of this volume profile in confluence with the golden pocket taken from the high to the low, sitting between 65.2k and 65.5k. After 4, we then look for a move to the downside in a wave 5 to touch the support area that we have just below us, 62.4k to 63.1k, and most notably the two levels here are the point of control at 62.9k and the value area low of the big range that we've been in for weeks now at 62.7k. The bearish scenario on the daily time frame is a zigzag ABC, where we have a leading diagonal to the downside, a 5-wave structure in a wave A, look for a bigger 3-wave structure in a wave B, and then a 5-wave C towards the downside, where the most common target area for C is between 54.6k and 50.5k. The probabilities are low for this wave B to end at one of the structures as explained in previous videos and previous live streams, which is the reason why we look for a bigger sideways 3-wave structure in a WXY. Zigzag in W, any corrective structure in X, but at the moment highest probability would be a flat ABC, and then a wave Y to the upside. And because this is a sideways WXY, wave Y is not allowed to be a zigzag 535, therefore wave Y can only be either a flat structure or a triangle structure. However, the minimum target for a wave Y is the 0.618 trend-based fib extension, taken from the low to the high of W to the current low on the chart, which as you can see is very close to the all-time highs, and it does lower the probabilities for this scenario. Preferably your wave X is going to dip a little bit deeper, so your target for Y is going to move towards the downside and not be so close to all-time high, because if you're going to move all the way up here to the 0.618, I mean, the probabilities are very high. You're just going to take out the all-time high, which is also the invalidation for this scenario. If we then zoom in to this wave X, then as mentioned, we're looking for a flat structure here. So we have a 3-wave structure A, 3-wave B, 5-wave C towards the downside. But because of what I explained earlier, the probabilities are not that great for this low to be the end of a wave 5 or a wave C in a diagonal, and then look for impulsive continuation to the upside, which also reduces the probabilities for the bearish scenario on the daily time frame. Looking at the CVD divergences on the 15-minute time frame, all of the bullish CVD divergences have played out, higher low in price, higher low, high low, high low. But on the CVD, we constantly made lower lows. There is absorption of market short with limit long orders, and all these bullish CVD divergences have now played out. Price is grinding to the upside, CVD is moving to the upside as well, so we need to wait for some new divergences. If we then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario. As explained, the bearish scenarios will only start to be considered if we lose 49.3k. On the daily time frame, the bullish scenario is also a higher probability scenario compared to the bearish zigzag ABC. In other words, probabilities are higher to take the all-time high before maybe at a later stage 56k, but at least the all-time high first. And on the 4-hour/1 hour chart more locally, the WXY does gain some probabilities just because it's weekend, because generally in the weekend we are creating ranging structures and not very impulsive moves starting wave 3s, and this would fit a wave 4 more in the WXY ending a diagonal structure versus a wave C to the upside in the local flat ABC. So that's something to keep in mind at least. In both cases, however, we are looking for a bit of a local bounce to the upside. I mentioned the resistance areas above price as well. And if price locally can create an impulse, well, then we're looking for the diagonal scenario and a bigger move to the upside locally for then a wave B and a wave C to the downside later. And if price is going to move towards the upside but in a corrective structure, then we're going to be looking for one more low in that WXY scenario. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.